Ladies and gentlemen, you are watching the Canadian Real Estate Channel, and today I have a fantastic guest for you, Zack Brittain. How you doing, Zack?
I'm doing awesome, Alec. I love the shirt. I love the energy, baby.
Yeah, thanks. So is it true you have a presentation for us?
Oh, we do. We got inventory, we got active listings, and we got days on market. So in Waterloo Region, we have just under 2 months of inventory. Guys, 2 months of inventory is still technically a strong seller's market. But when our market is shifting and buyers' expectations are such that if interest rates continue to go up, if more listings come up on the market, prices will either stay the same or they'll get better. Buyers are starting to hesitate, and that allows that next point right there, 991 active listings. That's 165% more active listings in June than the last year. That's great, but understanding all of them, like just the number of listings or just the inventory levels on their own, don't tell the whole picture. We're up 165% because there was 0 homes on the market last June. 0, right? So that percentage looks huge. People are like, oh my God, there's so many properties on the market. There is, but we are still technically in a seller's market. There is not as many homes available as there are that people want to buy them.
I think you guys need to pay attention. This guy is providing massive value. Massive. Hi, I'm Alec. Ladies and gentlemen, you are watching the Canadian Real Estate Channel, and today I have a fantastic guest for you, Zack Brittain. How you doing, Zack?
I'm doing awesome, Alec. I love the shirt. I love the energy, baby.
Yeah, thanks. So is it true you have a presentation for us?
Oh, we do. So for those of you who are first time on the channel, Alec's taken over. He's going to be bringing us through. If you don't know me, again, my name's Zack Brittain with the Phipps Brittain Real Estate team. We're doing Waterloo Region. This is a monthly update, Alec, and we're also going to go through some strategies for buyers, sellers, and investors. And then at the end, we got our investor hot list where we're going to talk about 2, maybe 3 types of deals that we see good value. But I think if you guys are interested in learning about Waterloo Region real estate, you want an idea of what the market's been like and how to kind of operate in a shifting market, whether you're buyer, seller, or investor, these are the main topics we're going to be covering. So,
were you born in Waterloo?
I'm a Mississauga. I was born in Credit Valley when Credit Valley was like just farmers fields, and then raised in Waterloo, Kitchener-Waterloo since I was 4. So,
okay. Do you plan on leaving? You're going to stay there? You're going to become the kingpin of Waterloo real estate, or what?
These are good questions. He did say he was going to grill me for some questions, guys and girls. So I see myself being in business in Waterloo Region for at least the next 25 years. I think there's more than enough opportunity. I think that it's a quality place to live. Yeah, Canada's kind of expensive to live, but at the same time, there's enough opportunity here. There's good schools, post-secondary, high school, private, public, whatever you want. And we're close to everything. I can drive to pretty much anything that I'll need within 2-3 hours or less if it's not within our own city. So yeah, lots of opportunity.
Smaller areas. I love smaller areas. So you work mostly with your friend, Matt Phipps. Is that right?
Yes, sir. Yes, sir. So if you guys are new to the channel, Matt Phipps is my real estate partner, both in sales and in investing. So he works with our clients for their buys, their sales, their investment properties, as well with our investment group for a lot of the projects we've done. And on the previous video, Alec, we shared a triplex or a 4-plex BRRRR in downtown Kitchener and a triplex one about 2-3 months ago, sorry. So if you guys are looking to get a little taste of what me and Matt are working on, great place to start.
Did you guys do that with your own money, or do you have investment partners?
Great question. All the projects we've done with our own money. We have taken on private as well for finishing construction, for in-between money. When you start getting into investing, especially when you're into larger projects or more projects, you got to scale. It's tough to do that if you're only working with your own money.
So are you and Matt friends from childhood?
Yeah, actually. So he convinced me to get into real estate on a whim. He was doing construction and renovations, and he rented a room at one of my parents' places that we were living at. And so we went through uni together. He was working, I was going to school. And then he's like, hey man, I think there's a lot of opportunity in real estate. You should meet this guy. And I was like, dude, I know what I'm doing. I'm done university.
Who was the guy?
So this guy, Nathan Flanagan, was a super successful real estate agent. Now he's investing in our market. Young guy, was crushing sales and was really growing and gave me a ton of opportunity. So we learned a ton from him. and then started building our investment portfolio and our sales business from there. But I was working at a bank, I was, making 45K a year, working weekends every other weekend, and was like, that's not for me. So got into the sales game, got into the investing game, never looking back.
So working at a bank, do you feel like you had a good perspective on numbers? Did you have to transition? Was that difficult?
No, I probably got more of that from self-taught in investing through college. I got into investing when I was 18, 19. Parents started investing in student rentals at the University of Guelph, where I ended up going and doing my undergrad. And just learning how to, save more than I spend and live within your budget and invest in things like ETFs, markets, blue chip Canadian companies, that kind of stuff. And just kind of taught, okay, $1 today is worth more than $1 tomorrow. So the more I get now and invest, the better off I'll be. Okay.
So real estate, what else you got in your portfolio?
I'm long-term buy and holds like my boy Warren Buffett, baby. I look for value companies, cash flowing like a beast, buy them low, hold on to them forever. If they go deeper, then I'll buy more. If not, I'll wait for them to recover and they'll start selling off for gains. I want businesses and I want investment properties that make money. If I can't explain to you how it makes money on a napkin, if I can't explain to you how much cash flow I'm going to get in a minute or two, I'm not interested. I want businesses that make cash.
Excellent. Love that answer. So,
right? Cash is king, baby.
One thing before your presentation, you seem like a really smart guy. Lots of people are investing. They're investing in all kinds of stuff. What's maybe one stock that you would recommend, and just quickly why? And then let's jump into your presentation.
Stock that I would recommend. I can't give just one. For local companies, anybody that's here in Waterloo Region, they know Linamar really well. They're at Guelph. They're a massive company for Canada, but also you can't go wrong with the railroads, guys. Railroads are still going to be around. Wait till they get cheap. Pick them up. Choo-choo, baby. Choo-choo all the way to the gains. You can't go wrong. They make a ton of money. They're huge, and we still need them for the next 50 to 100 years. Boo-hoo.
I think you guys need to pay attention. This guy's providing massive value. Massive. How long have you been in this game, the real estate game?
This is our 6th full year in real estate. I've been investing for 11 years now. I still have in my phone my very first trade too, because I was like, I got to remember this. It was like a gold ETF. I did it with borrowed money because I used my OSAP money to start my TFSA portfolio. I don't recommend this, guys. This isn't investment advice. This isn't investment advice, just to be clear. But I was like, I made like $200. I was like, I got to get it out. Like, I can't lose this OSAP money. I got to pay it back. But yeah, I just think, and we'll touch on it later. This is a big reason why in the first slide in the presentation, I put the photo of Warren Buffett, is I just want people to come into this video with that long-term investor mindset. People get so caught up when markets are bad or economies are going poorly. It's always going to be bad. It's going to get worse, which very well may. But at the end of the day, good times don't last. Neither do great times. Like, it's a cycle. So like going through this presentation, if you're an investor, you're thinking about buying your first home, thinking about selling a property, or you're just here to learn, long-term mindset will help you better understand what your goals are and what you need to know and do to get there. And it just puts into perspective that like wherever we're at now is not going to be where we're going to be at in 5 years or 10 years or forever. And I had a lot of conversations with investors and a lot of conversations with clients and people at our network. And you could tell the people that are having that long-term mindset and the people that are really scared and worried right now. So just take a step back, guys, really consider the long-term picture of what you're trying to do. And what we're going to do is break down the market now and what we see and what we think is going to offer value for investors in the short term and in the long term. All right?
So when you're thinking long-term all the time, what would you say to someone that needs money now?
Needs money now is price that in, right? If you need money now, money can be found. There are lots of people out there that are more than happy to give you funds, to execute on projects, to invest, to build a business, whatever it may be. If you're having trouble finding those people, keep talking to people and asking them if they know anybody else. But the reality is there is money to be had very easily. If you want it, go get it. It's there.
Absolutely. Absolutely.
Seriously.
Great.
So let's get into the Waterloo Region stats. And then for those of you that aren't familiar with Waterloo Region, Alec's probably going to poke a bunch of questions out there. So for things that you guys don't know, the point of the stats is to gain context on where our market is now and how you could potentially fit into the market depending on the types of deals you're after. Now, I put a photo up of Bob Barker, some good memories from Bob Barker, staying home from sick and watching The Price is Right. Now, the price is getting right. We are at the same prices that we were at last year, plus minus, a couple percentage points, depending on the market segment. Median sale price for everything in our market, guys, 736. That's down about 200K from February, but about the exact same level that we were at this time last year. Detached homes, semis, towns, condos, they've all fallen from the same prices last year, or set from the prices in February, excuse me, and they're around the same prices as last year. But Alec, I'll ask you a question, and I'll ask people to drop a comment. Which of these 4 segments do you think has fallen the most in terms of value from February of 2022?
I always think condos. I just don't personally love condos myself. You never know. I want to know. I want to know also. Around here we're seeing a lot of homes go up for sale on a regular basis. Are we seeing that same trend over there in Waterloo?
Yep, we're going to get that into the next slide. But a funny thing on the condo market is, specifically in Waterloo Region, condo market was like nothing until about 5 years ago, and it has exploded. So most of the condos that are coming to market and selling are brand new units in premium downtown or uptown locations. So those prices, they're holding.
Still going up.
They're not necessarily going up, but they're holding better than the detached homes. The luxury detached homes selling like crazy. Premium locations, premium features, fully renovated, nice areas. They're still selling very well. Luxury market is totally different beast right now, guys. But the average detached home, or the detached home that's a little more distressed or needs a little bit of love or has a motivated seller, they're selling at bottom of the barrel prices, and they're dragging that median and that average price down. So depending on which segment you are within these 4 segments, the markets can be totally different, right? So you just asked about number of listings. We got inventory, we got active listings, and we got days on market. And Alec, when you're looking at a specific market or a type of investment, would you look at 1 or 2 pieces of data and stats, or would you look at 10, 15, 20 different stats?
I look at all the stats all the time.
Why?
Because I like to know what I'm looking at. I like to know different areas. I like to get as much information as I can. And I believe that there's a part of our mind that processes things subconsciously, and you just got to feed that computer.
That's absolutely. And what you're doing is you're building context. You learn a lot about one market, and then you can take a lot about that one market and see how it compares to a different one. A lot of people that watch the videos on the Canadian Real Estate channel, they're doing that too. You guys want to know what's going on in specific markets and compare it to other areas, right? So in Waterloo Region, we have just under 2 months of inventory. Guys, 2 months of inventory is still technically a strong seller's market. But when our market is shifting and buyers' expectations are such that if interest rates continue to go up, if more listings come up on the market, prices will either stay the same or they'll get better. Buyers are starting to hesitate, and that allows that next point right there, 991 active listings. That's 165% more active listings in June than the last year.
How does that compare to the whole population of Waterloo?
Whole population of Waterloo Region is about 600,000. But the big markets are Kitchener-Waterloo and Cambridge, and that's going to make up 90, 95% of the population. This is still under the 10-year average of active listings in any given month. So yes, we have more. It's increased like crazy from June last year, but this is why I put an asterisk beside that, and why I asked if you look at more than 1 or 2 pieces of data, is because just the number of listings or just the inventory levels on their own don't tell the whole picture. That's just one little tidbit. And if you guys are looking at specific stats and just holding on to, oh, well, prices are this, or, oh, there's this many listings, that's great. But understanding all of them, like we're up 165% because there was 0 homes on the market last June. 0, right? So that percentage looks huge. People are like, oh my God, there's so many properties on the market. There is, but we are still technically in a seller's market. There is not as many homes available as there are that people want to buy them.
How long do you think the seller's market is going to last?
It's starting to shift already. We are technically in a seller's market, but it's acting like a balanced market, right? Properties are selling a little bit above asking price on average, but typically most listings are going to sell around 30, maybe 60 days, which is much more common than in a balanced market than it is in a seller's market. And see on the last point here, average days to sell is 13. That's 2 weeks, right? This is really skewed because over the last 3 to 4 months, more properties have been canceled, listings have been canceled or expired and relisted. If that happens and then the listing sells right after it's been relisted, the days to sell stat on our MLS system is skewed. So you have to be very, very careful when you're looking at average days to sell. If you guys are considering selling a property or you're looking at homes that are on the market, you're like, it's been on the market for 2 weeks, they're going to take $400K under asking price. The reality is most listings are going to sell between 30 and 60 days in the market that we're in right now. That should be your expectation.
I love that. It's nice to have some insights, from someone.
A little bit of context, a little bit of insight, right?
Love it.
So now we're going to get into seller specific strategies, buyer specific strategies, and then at the end, investor specific strategies. So, I had the Bob Barker one up first, and I had to kind of put this one up again. I know there's a lot of Happy Gilmore fans out here, big movie here in Canada, but I put it up because you have to price your listings right. Whether you're selling an investment property worth 20 million or you're selling your family home, it does not matter. If you price it right, you're likely to sell it quicker and for more money. If you price it wrong, i.e. you price it at last month's price, then you're going to be chasing the market on the way down. You're going to leave money on the table and nobody's going to come look at it. Price it right. Best way to do that is to know your competition. Who's on the market? How do you compare features, condition, location? How well does it show? Are you going to go view those other listings? Like, I'll go look at other listings around an upcoming listing of mine almost every time. I want to know what people are saying. If people are going to come look at my listing in your neighborhood, you bet your ass they're going to go look at other properties right in that same block or in that same price point. So when a buyer's agent calls me, oh, well, we want to offer this because of X, Y, Z. It's like, I've seen those other properties. Don't bullshit me. We know what you're talking about. We've seen them, and that'll only give you more context and power as a seller. And then finally, like, just please, 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 if you're selling a property, make it show ready. Just clean it. Consider investing a little bit of money. Like, I cannot tell you, I'll go into multi-million-dollar homes and it looks like they haven't had the property cleaned in weeks. Guys, what are you doing?
Do you have relationships with people that stage homes and people that'll go clean those homes? And when you're talking with clients, do you help them do that? Are you mostly working with sellers or buyers?
We're about 50-50. We're about 50-50. I like working with all of them, to be honest. I'm a young guy, so a lot of people in our personal network, they're buying their first home or their first investment property, or they're starting to really scale up, so they buy a lot. At the same time with sellers, like, we have everybody. Cleaners, stagers, contractors, everything, because we do this for our own properties. When we sell one of our own properties, we just released a video on our YouTube channel about how to sell your properties, what you need to be looking at. And one thing we've been harping on is investing in your property and staging it and cleaning it. If you don't have money, I can give you literally a dozen things you can do for less than a combined $1,000 that is going to help you net tens of thousands of dollars on the sale of your home. Like, it's just going to take a little bit of energy and time. Cleaning, updating your exterior, interior, rearranging your furniture, decluttering, like simple things that'll save you and make you tens of thousands of dollars. So please just invest a little bit of energy into your property, guys.
Massive value, Zach, massive.
Buyer strategies, Alec. So the number one question we get is somebody's coming to us like, hey, well, we're thinking about buying. We got a property to sell. A few moving parts. They're like, do we put our property on the market first and then after we sell it, go buy? Or do we buy a home first, then put our home up on the market? So these are for individuals that are either moving from within the same city, or say we have a lot of clients that are coming to us from the GTA. They're juggling selling a property in a different market and buying one here. This is super circumstantial. If you need a specific sale price from your current home to go buy something else, okay, then you're probably going to have to sell first, right? But ask us how you can continue to prepare and shop for your target properties as you do that. On the other side of the coin, if you're trying to buy an extremely rare property and they don't come up very often, then you should probably consider maybe buying first, because it's going to be harder to find that target property. But what we can tell you, Alec, and all the other buyers out there, is be picky right now, but be aggressive, right? Where we see a lot of issues with buyers is they're going to be hesitating because they think that there's always going to be a better deal coming up. But if you know your market and your real estate agent's advising you on what the market is like for your target properties, you can make an educated decision now, right? The next point, cash versus conditional. We see a lot more conditional offers in balanced markets, right? So there's just as many buyers as there are sellers out there right now, Alec. Let's say you're going to see, as a seller, you're probably going to receive more conditional offers. And as a buyer, you're probably not going to have to compete with as many other buyers when you're offering a property. So you may be able to get a condition on finance or a condition on inspection. But I can tell you right now, we helped 2 clients purchase in July, and both them purchased cheaper than what the highest offer was because they brought a cash offer. They saved tens of thousands just because they brought a firm offer. And they brought a firm offer because they've talking to their mortgage broker, because I'm sending them the mortgage broker information that they need before they put an offer on a property so they can confirm it's in their budget. And as a buyer, if you're confident in the condition of the home and you've done your homework, then you just need the property at the best potential price. And if we can save our clients 10, 20, 30, 40 grand because we're putting in cash offers instead of conditional offers, could be an option.
I feel like I got to come buy stuff in Waterloo just so we can do some work together. You sound like you're really covering all the bases.
We've done this before, my friend. And I think the biggest thing is a lot of people don't necessarily consider all these because they just jump right to, I saw a house I want to buy. But if you don't lay the groundwork, if you're not understanding your goals, if you're not understanding your market, if you don't have your financing ready to rock and roll, you're going to get crushed by people like us. Our buyers are going to come out and beat you. So I think another thing I want to do right before we go on to the next stuff, Alex, is just have a quick conversation about affordability. Now, as a buyer, for our clients, we run numbers. So if interest rates go up 0.5% or 1% or 2%, how does that affect your monthly payments? If prices go up or down 50K or 100K, how does that affect your prices? So we even know before we start shopping for properties what they're going to be spending in each specific scenario that's realistic for them. But long term, and I think this may be a really good question for the people that are watching too, is leave a comment. Do you think Southern Ontario is going to be more affordable or less affordable in the next 5 years?
Well, personally, I think more affordable. And what do you have to say about the people that there's kind of rumors going around there's going to be a crash in the market, maybe as high as 70%, especially in residential?
That would not be great. That'd be a lot of people would go bankrupt. I honestly, I stick away from making predictions. In 2007, 2008, there was 13 economists that work for Bloomberg. These are like the smartest of the smart economists. These people are brilliant, right? 12 of the 13 said that 2008 was going to be the best year ever.
They were wrong.
What do they know? They're making a prediction. A prediction is merely a collection of information to have an idea of what you think is going to happen next. It is an educated guess, but it is still ultimately a guess. I do not think there's going to be a massive crash. I don't think we can build units quick enough. I think we've had an affordability issue in Canada since the 70s because it is too expensive and too time consuming to build units. And we don't have enough skilled trades. We don't have enough labor. We need more people and we need to be able to build more units quick enough. If prices do come down that significantly, you know what I'm going to do? I'm going to take as much money as I can possibly find and I'm going to acquire as much as I possibly can. And that is long-term going to make property less affordable for the average Joe because there's going to be more people in the investor side that have financial flexibility and means scooping up units. So I hope it does. I really hope it does. I wish property was more affordable. I think that would be fantastic for our economy and our lifestyle in Canada long-term. But ultimately, I don't see it going that way.
Love your optimism.
So I wish it was, man. I wish it was. Investors, guys, long-term plan. What's your goals long-term? What's your 5-year plan, 10-year plan? Do you need cash flow? Do you need equity? Are you looking for debt pay down? Do you want development opportunity? Are you just parking capital? Like, get specific. It's just a plan, but the more specific you get, the more accurate you can get your next steps. And then in margin of safety, in times of uncertainty, guys, operate with a little bit more of a margin of safety until you have more certainty in your personal financial or in your business outcomes. Okay. But Alec and everybody else, please just continue to focus on fundamentals and value. 2 years ago, people were looking to find new ways of value because the markets were so competitive. That's when our market got a lot of coach houses. That's when you're looking at redevelopment and addition opportunities as opposed to just single family flips and duplex conversions. That was great. Investors are finding new ways to create value in our market and make money. That's awesome. But the fundamentals are so key right now. Invest in cash flow. Invest in cash flow, guys. There are cash flow positive properties in Waterloo Region. Take them. They are here. Okay.
What's the largest? Talk to me about the largest apartment complex you guys have in Waterloo, and maybe you were saying that there's slim pickings sometimes for medium-sized apartment buildings like 20 units.
Yeah. So there's actually a big old beast, 2 massive apartment buildings that I believe it was BRRRR listed. I think they put it up for $1. They didn't disclose the price, what it sold for, but it sold in less than 2 months at the beginning of the year. There's a 12-unit building that we just shared on the investor hot list last week. It sold in less than a week for $100K over asking price. For most properties that are like 20 units and under, a lot of the older stuff is the stuff that you're going to see. So you're probably looking at closer to $250 a unit for those types of properties, but they need significant work. So you're probably 20% of the units are rented at good rents. The other 60 to 80% are either vacant or like mid to crappy rents. So you'll have to really turn those over to get some good juice out of them. Some student rental buildings have been listed lately, but they haven't sold because student rental is kind of a different beast in our market as well. It's very saturated. It's very competitive with big players in Waterloo and Uptown Waterloo specifically. But for traditional apartment buildings, you'll maybe get a dozen over 10, 15 units a year hit the MLS. A lot of that's done off market, guys. That's investor to investor. That's relationship based. That's, the commercial developers, the commercial lenders, the investors personally. That's really where a lot of those deals do get done. And the only way you get into those deals is get your experience or get connected with the people that do.
So if someone's watching this and they're thinking to themselves, I really want to get into this market. It sounds fantastic. It sounds like Zack knows what he's doing. Do you think you're the right person to reach out to hook them up with some of those off-market deals?
Off-market deals are really tricky. Yes and no. If their expectations are to find an off-market deal that is going to be 10 to 20% cheaper than what you'll find on market, then I'm not your guy. Off-market deals does not necessarily mean way better value once you get to the larger multi-units. Off-market deals just means those deals do not get listed on the MLS right away. Right? So if the investors are looking at this like, you know what, off-market deals are the only way to go. I'm going to save 10, 20, 30% just because I can buy it direct from an investor and it's going to be off-market. That's sure, that can happen. But the reality is we're dealing with other people that are investors and businessmen. They're not going to give away units for nothing just because it's not posted on the MLS. To get access to those deals, yes, come contact us. We have a network of investors. We have a network of lenders. We have a network of owners. That is something we can provide, but the off-market deals are not something that are bountiful in our market yet. It's still very competitive. Next, and this is something that I really want to touch on quickly, but I think is super important, especially for somebody that doesn't know our market very well. So if you guys aren't really familiar with Waterloo Region or you haven't watched any of these videos, I want to talk about our market in just broad perspective. Almost 25% of all listings, right in the middle, 23% of residential properties are not owner occupied in Waterloo Region. So almost a quarter. As interest rates go up, guys, owners are selling properties because they can't afford their mortgage or they've made enough money on their home. They're retiring. They're moving out of the area, death, divorce, whatever it may be. People are going to continue to sell their properties, right? But what also is happening as interest rates go up is some people can no longer afford to get the mortgages they need to afford to purchase the property they want. So they're going to stay in the rental market. So we're going to get some new renters coming in that have sold their property. We're going to get other renters staying in the rental market because they can't afford the new interest rates. And we're also getting population growth, a lot of students, a lot of young professionals, a lot of tech money, a lot of insurance and finance money coming in and renting here from the GTA specifically, and newcomers to Canada, more renters. Rental rates are going to go up because there is already super low vacancy for units and it's already super competitive. Like we had a 2-bedroom and a 1-bedroom listed on one of our downtown multi-units and like dozens of applicants, probably about half a dozen A+ applicants within the first weekend.
How long does it take to drive from Toronto to Waterloo?
Rush hour or not? No traffic. You can get like downtown Toronto an hour 15, door to door from downtown Kitchener. You're hitting traffic. You're $1.30, $1.45, maybe 2 hours, depending on how bad it is. I used to make the drive all the time. I lived in downtown Toronto for a couple of years. Lived in Etobicoke for a couple of years. I used to do that commute a lot. So about an hour if you hit no traffic.
Do you think more people are going into Waterloo than ever before?
It's funny you ask that. When we have listings or when I'm showing properties, I'll look at the business cards, see where the real estate agents are from. They GTA got the 647 number, they got the 416 number, they got the 905 number. And when our markets are really hot, you see about 30 to 50% of the business cards are people coming from the GTA, right? But right now, not nearly as many. Most people that are making that move, they're looking for detached homes or they're looking for premium downtown locations because their clients are moving in to work and live in the downtown area, or they want, my bad guys, or they want a detached home with a yard, right? That's where we're seeing a lot of it. And we will continue to see that growth. I mean, I don't know if you've lived in the GTA, but unless you want to own a condo for the rest of your life, cough up a couple million, or you go live in the suburbs and you're still spending a couple million for something decent, you can buy a beautiful detached home in Waterloo Region for under $1 million still.
And what kind of incentives are there to move to Waterloo when it comes to the economy? People want to grow their jobs, careers. Like what kind of demographic is there?
Yeah, we're getting a lot of young talent. People that are in tech, people that can live remote or work remote. We're getting people that are coming for school and staying as well. There's 2 massive universities, and a large college in Conestoga College, and people will graduate from those and they'll continue to work here. You can graduate, you can find a job making 60, 65K a year right out of school, and you can live for almost, 25 to 30% cheaper than you can in the GTA and get way more for it. It's a city feel, but it's not big city busy yet. So like I said at the beginning of the presentation was, I see myself living here. There's enough here for you. It's still got everything you need as in a big city, but you're not going to be go, super busy, outrageously expensive yet.
What do you think is going to happen over the next 20, 30, 40, 50 years in Waterloo?
Any open space you see in the downtown to midtown area is going to be an apartment building or a condo. Reaching out towards New Hamburg, out towards Guelph is all going to be detached home suburbs. Along the 401 in Dune South is going to be double the size in detached suburbs. Cambridge is going to have 2 or 3 massive suburbs right off the 401 as well. And then like if you go, so McLennan Park, I mentioned this on a previous video, McLennan Park, Mount Trashmore is kind of in the center of Country Hills West in Kitchener. Every now and then, me and my wife will go walk up there and I'll count the cranes because you can see uptown Waterloo, downtown Kitchener, and you can see parts of Cambridge, and I'll just go count the cranes. 5 years ago, there was no cranes. There's 20, 30 cranes at any given time. Anything by a highway, anything by an ion rail stop, anything that has a parking lot, gone. That is now an apartment building, commercial mixed-use complex, or a condo building.
Yeah, we're seeing the same thing in Ottawa. There's more cranes than planes.
Yeah, well, speaking of planes, we also have an airport, and they're investing billions in that too. So
love it.
It's going to grow. So let's get into some stuff regarding investors. I know a lot of people on here, they want to know what's going on in Waterloo. I appreciate some of the perspective and just some of the insight and questions on what we think. But again, like we rely very heavily on data when we advise clients, and just every client's situation is completely different. So yes, take everything here that we're saying in context for your own goals and your own financial situation. But for the investor hot list, we share deals every single week for people on our investor hot list. This is a great way to get an initial look at pretty much anything 5 million and under in our market. Single family flips, duplex conversions, triplex, fourplex, all the way up to the larger multi-units that are on the market. We send an email out. You guys get a little list on what we think is going on in the market, where we think some value is, as well as a couple of key points on some of the deals we think are really worth a good look. We've sold deals on the investor hot list. We've had clients come to us and look at properties from the investor hot list and get more information on rental rates, reno budgets, anything else you need to know about those specific types of properties and how they're different in our market compared to the market you know. So link in the description, guys. Go to the contact us page, select the investor tab, leave us a little comment. We'll get back to you right away. This is a great way to get an initial look at investment properties and our mindset and what we're looking for in our market for free. All yours, guys. Duplex conversions. We've talked about them before. I'm not a super big movie nerd, but a lot of my friends are like, loved the Lord of the Rings movies. And I did like the whole Return of the King. Duplex conversions were king in our market about 2 years ago. And they've really made a big comeback because the numbers do look really juicy. For investors that are looking for quicker jobs or smaller projects, or you're looking to get maybe your first or second property, duplex conversions could be a great fit because of the amount of capital that they require, how quickly you can come in and out of them, their margin of safety, how available they are in our market, and their options. I just want to talk about options. For newer investors, having options with your property is key. Where a lot of investors miss on is they buy an investment property where they only have one option, one good option, I should say. And the only other options are to sell, or they can't refinance it, or they can't reinvest in it. Duplex conversion can offer you so many options. So
you've personally done a duplex conversion in Waterloo?
The house I'm in right now is a duplex conversion. One of the first properties we did, actually the very first investment property I did was a duplex conversion. And just to be clear, guys, like you don't need to be a renovation guy to do it. Like Alec, like I didn't even own a single power tool and I did a full gut job duplex conversion. Like you guys can figure it out. If I can do it, you can do it. Like very possible. And for those of you that don't know how to do it or don't want to know how to do it, but the numbers make sense for you, we have a team of contractors we can refer to our clients. They'll do it for you. There are also investors. They've done dozens of duplex conversions. They'll bang them out for you perfect. Okay. So duplex conversions, distressed homes, motivated sellers. Find the motivated, right, Alec? Find the motivated. Margin of safety as well is, since you're looking at distressed single family homes and you're inherently adding value because you're taking it from a 1-unit property to a 2-unit property, you're increasing your margin of safety right away. That's your value add, right? So if the market stays the same or it dips after you purchase it, you have such a big margin of safety, you're still cash flow positive by a mile. So I like the 3 key options with a duplex conversion. You do all the work. You buy a single family home, Alec. You upstairs is a 3-bedroom unit, downstairs is a 2-bedroom unit. You're renting it out from $4K to $4,500 a month. Great money. You just hold it for cash flow. You just keep it as is. Your money's invested in it. You're making beast cash flow on that, right? Option number 2, you sell it for a profit. You have a chance to sell it for a premium price, and you can roll that into, say, a 4-plex or a 6-plex because you have a larger pool of cash now. Okay, does that make sense? And then option number 3, reinvest. Refinance it, pull out your equity and go do it again, or refinance it and go build an addition or a tiny home on the back because in our market, a lot of properties that you can do convert from single family homes to duplexes have the frontage and the depth to allow for a tiny home in the back. We're looking at plans for this. Personally, we've talked to a few people that have already done them. There's about 4 or 5 that have actually been completed in our market. They're new, but it's a chance to add a brand new unit that could net you about 2K, or not net you, could bring in about $200 to $2,200 a month in rent. And you can build it for, let's say, 200 to 300K, depending on how swanky you go. So great way to add a unit at a favorable price. You get experience building, and it's probably not taking additional cash out of your pocket.
Have your cap rates changed a lot in Waterloo recently?
Last 2 years, not so much. But before that, yeah, you could be scooping up some stuff around a 5 cap or get close to a 5 cap. If you're looking on market multi units without doing any tenant turnover, you can find, if you find anything around a 4, worth a look.
So you're easily adding $100,000 in value right away, immediately.
Yeah, so you should be getting your renovation budget and then some back is kind of how the numbers run out. But that's assuming, like, we're running them on higher interest rates. We're running them on unfavorable refi numbers as well. But that's why it's just really important for a seller or investors to understand their options with those properties. That's why I wanted to put them up, because that's why we like them in the first place. The duplex conversions and our next one, multi-unit BRRRRs, are a great way for a small to mid-size investor to scale, because you need to get more cash. You need to get more experience. You need to build your team and your network for investing, for financing, for renovations. And these are manageable projects that offer good short-term and long-term value, but don't handcuff you so you don't have any cash or capital left over to move up to the next level. And that's where a lot of investors kind of get stuck, is they say, okay, well, I have a couple properties, but I can't get A lending, or the B lending doesn't make sense, or the private lending doesn't make sense for the deals I'm looking at. To break through that ceiling, you need to have options with the properties you're acquiring as you get there. And then duplex conversions and multi-unit BRRRRs, they offer those.
Yeah, well, I mean, that's how we got started too. We're doing BRRRRs. I always love the, it's chilly out here. I don't know if you guys say that, but out in Waterloo. But the thing that I love the most about the BRRRR is there's the opportunity. We work primarily with other people's money, and it's the opportunity, in short term, to give your investors something that they can feel good about holding forever, making their money back quickly, and rolling that into other properties over and over again. This strategy in my world is the king.
Yeah. A lot of people that don't have any experience maybe in renovating or owning multi-unit properties, it can be a big jump, but I can't agree more. You're absolutely right. It's and especially in our market, Alec, we've talked about it on the channel before. Waterloo Region is 3 cities, old cities that have grown into each other. So in all their downtown city centers, you have a lot of like really old homes, but premium locations. And they've been cut up or done additions to make them into multi-units. They could be legal, or they could be legal non-conforming units, but they're in premium locations. So if you're getting those at depressed rent or depressed condition, I'll take that location, I'll update it, and then I'll get a premium rent for it because it's in the best neighborhoods, it's in the best areas. And then if you go to midtown locations, a lot of midtown Waterloo Region, Cambridge, Kitchener, and Waterloo was developed by German and Dutch developers between the 50s and the 80s. So you got nice size frontage, all brick, purpose-built triplex, fourplexes with big yards and parking. They may have garages there already or room for garages. So you have a lot that has space for development if you need to, and they're purpose-built. They're built for a multi-unit. They're not retrofitted. They're legal. And those options, you may pay a little bit of a premium because they're purpose-built, but long-term, way easier for you to manage and update as an investor, and they offer immediate upside to add units or add storage and parking. Done. So we love those. We love those. Before we wrap up here, I think for the multi-unit BRRRRs, guys, numbers don't lie. Check your numbers. Run them at a higher interest rate. Talk to your mortgage broker. Talk to us, but also finding the motivated. Now, Alec, you were an investor as well. Would you say investors are price motivated more so than, say, your mom and pop buyer and sellers, or less price motivated?
I think a lot of people want capital preservation. We just got a 19 unit in Thunder Bay with a VTB with deferred payments for 2 years. So I think people, in a lot of cases, they really just want to make sure their money's safe, and like you're involved in the markets, like crypto's down, stocks are down. A lot of people think that that's just the beginning of the trend. I mean, again, you don't want to speculate. I won't speculate too much, just rumors. But I think it really does depend on who you're talking to, and it's important that you know what the motivations are. So being motivated is one thing, but people are motivated by different situations. Some people want to get out of the game completely. They've been involved for 30, 40 years, and they're ready to just sit on the beach for the rest of their lives. Other people, they want to go big real quick, and they need cash, right? So sometimes knowing exactly how much cash they need, you can still work with that person and get creative. But for me, it's really all about understanding the specifics as to what the seller wants or needs and dealing with that. That gives you the advantage and the leverage in the relationship.
Listen to that again. Rewind that and listen to it again. Understanding the numbers, how much they need, what the seller's situation is, what their motivation is. Like, guys, these are other people. You're not buying something from a robot. I mean, some investors can be robots, but like understanding what makes sense to them. Like there's always a deal to be had. What I really just caution people right now is sellers' expectations are taking a little bit longer to change than just your everyday single family home. We still have sellers on the market from 2-3 months ago with multi-units. Then they're looking for February prices. They're just not that motivated, or they need that specific price and maybe they're willing to offer something else in exchange for it. You guys don't know. But if your situation isn't 100% locked down, if you don't know how much capital, you don't know your lending options, you don't know your goals and your key metrics, you can't even start to approach them for specific scenarios that could work with them because you don't even know what would work for you. So know your numbers and then figure out where and how motivated the specific sellers are. I think like what Alec just said is so key. Is everybody's situation is different, but like he just got 19 units with deferred payments on a vendor takeback. He wouldn't even have known that if he didn't know that that was an option or to ask if it was an option.
Yeah, in a lot of cases, people they get into the market and they're trying to get specific things. And in our case, the seller wouldn't budge on price. And we were able to show him the numbers and kind of how we do things in the back door and say, well, your price won't work. There's not a single scenario, well, your price will work now. It would work in 2 years. And we'd be happy to pay your price in 2 years. But we need to be able to get in there, move some things around, make it work. Like you said, change tenants, maybe do some renovations. And we were more than happy to give him his price in 2 years. And we took a property that was negatively cash flowing by thousands, and it's now positively cash flowing as soon as we close on $10,000 a month. And it just puts us in a situation. Yeah, it's all about value add for us. At this point, I mean, we are doing new builds and we are acquiring stuff. And you said earlier one thing, you said, you know, it's more expensive sometimes to build than to buy. But in places like Ottawa, and as you get closer to Toronto, maybe this is true in Waterloo, it's starting to level out. And you know, there's a lot of incentives for builders. Like you said, there is a housing crisis. So it's important to understand like what your goals are and how you're going to move forward, because you know, our team, we look at all strategies, we're looking at all opportunities. I'm really based on fundamentals, and you know, I'll buy anything. You know, I'll flip a couch, I'll flip a hat, I'll flip a Pokemon card. But like whatever it takes, you really got to understand where the opportunity is and how much money you can make.
Yeah, and I think a big thing that is like you're learning multiple markets yourself. Investors that are watching these videos, you should be learning your market, but talk to the professionals. Like straight line is the quickest way to get from point A to point B. A lot of people are coming to us and asking us what's going on in our market, what numbers and metrics are you looking at, and every investor is different. But at the same time, the quicker you can get to realizing what types of deals are available to you and how they make sense, the quicker you can decide whether I should start pulling trigger or digging deeper on those types of deals. And I think like value add projects right now, they offer great margin of safety and they offer cash flow. Cash flow, cash flow, cash flow. We're in a market where there's still fantastic cash flow. Take it while it's still there. The amount of investors that have come from the GTA for the last 10, 15 years, just because they get way better cash flow for the same purchase prices here or less purchase prices here, it's going to continue to go down the 401, guys. People that are in our market are going to move down to London. They're going to go down to Windsor like they already have. They're going to look at your Sarnias, your Brantfords, right? Different markets, different beasts, different opportunities. But right now, like there's still a good few years of easy cash flow on the table for investors in Waterloo Region. I'm here for it.
Yeah, I'm absolutely looking for cash flow myself, and I love value adds, and I know for sure we're going to talk more after this is done, and I'm going to make sure that we're looking at the MLS in your area, you know, today. I know what I'm going to do. I'm really impressed with you. You're a young gentleman, right? You're 31 years old.
Oh, 31, a couple weeks ago, baby.
Yeah, congratulations. Happy birthday.
Thank you.
I'm really impressed overall with your knowledge of your market and your energy, and it seems like you do have a strong network. You mentioned earlier on that your friend Matt was the one that brought you into investing, and I want to know, what were you going to do before that? Just stay at the bank forever? Was that your dream?
Money. I was going to manage money.
That was it. So you grew up as a kid. You're like, I'm 3. I just got some cotton candy, and I can't wait to manage money. Like, what was your dream?
No. As a kid, I was always somebody like I never knew what I wanted to do. I knew I wanted financial freedom, and I knew I wanted to be involved in business, but I never was like, I'm going to sell real estate, or I'm going to build a construction business, or I'm going to, I don't know, build a railroad. I don't know. I never had that core dream, but I always knew I wanted to be involved in business, and I always liked learning. And like in investing and in business, like it's infinite. I learn every day, and I have control over it. I knew I hated authority. I didn't like having a boss. So doing my own thing was really cool. And I get to choose who I work with. I get to work with other people that think like me, want the same goals as me. And we've had a lot of people reach out from these YouTube videos or in our social media, and just normal people that want the same stuff that you want in life. And I knew that that's what I wanted to do. I wanted to connect and be around other people and ultimately be able to help them. Like, sure, I'm in business mode. I'm growing and acquiring as much as I can as quickly as possible. But long term, if I'm a successful business owner, real estate investor in Waterloo Region, we do reach a level of success, you have an opportunity to really reinvest in your community and actually help a ton of people. That'd be cool. That'd be really, really cool. But no 3-year-old cotton candy. No, Zach's going to sell real estate or manage money. We still manage money on the side. Like, that's still something that we're involved with, and that I still do have, personally long term. I think there's value in being diversified, but I just look for opportunity wherever it is.
Well, it's been a great opportunity to talk to you. I just have kind of one more question before we wrap up. I really appreciate your presentation. Very thorough. Your energy is fantastic. I look forward to working with you. I can't imagine anyone watching this and thinking they're going to go with anyone else in Waterloo.
No shot.
But it sounds like there's enough opportunity in Waterloo for you to stay there for at least the next 25 years. Mm-hmm. If you had unlimited money and unlimited time and you could learn anything and do anything, where would you go and where would you invest?
Oh, that's a really good question. Unlimited time, unlimited money. I think the unlimited time is more valuable than anything. The money can be found, the money can be got. Oh man, like, am I doing this purely for profit, or am I doing this for the good of humanity? Because there's a few different ways you could take it. Purely for profit, probably go into technology, learn more about that space. Had I been smart, probably should have gotten into trades for practical, but for theoretical, get into physics, get into computer science, go that route. For humanity though, I mean, you can do a lot. There's a lot of good that needs to be done here in Canada, but there's a lot of parts of the world that there's a lot of people out there that are working hard. They just need a little bit of help. So I would love, if I had limited time and limited money, I'd probably go into humanities. But if I was looking for profit, tech, got to go with the tech space. There's too much opportunity there. So
let's imagine, we're 25 years into the future right now. You have more money than you've ever imagined. You've just been expanding and grinding. Maybe you have a family, and you've already helped out humanity. You know about physics. You're well-rounded. And what kind of skills and what kind of art and culture are you interested in?
I'm a traveler. I could eat. I love the food game. So I would probably be spending a significant time somewhere where there's a Spanish culture. And I haven't had a chance to go to Asia yet, and I'm a big Asian food guy. So I feel like that'd be a ton of fun. I just spend my time traveling the world. There's so much to learn and see out there. I could travel the world 10 times over, and it'd be different every time. So I just think that'd be a crazy experience.
Well, you sound like a fantastic individual. I think we're going to be great friends. Honestly, I look forward to talking to you again soon. Everyone, this is the Canadian Real Estate Channel. You just heard from Zack Brittain about Waterloo. I'm Alec Mead. You can follow me on Facebook and Instagram. Zack, what's the best place for people to connect with you?
Best place, Phipps Brittain Real Estate on Instagram and on Facebook. We have a YouTube channel as well. And there's a link in the description for the contact us for specific questions or information and resources. As well, just drop a comment. We're active here on the comment section, but most active is going to be Facebook and Instagram, Phipps Brittain Real Estate. Happy to see you guys there.
All right. Thank you very much, Zach. You have yourself a great day, and see you at the top.
Yeah. Take care, guys. Thanks so much for watching the video. See ya.
Bye.